Good afternoon, ladies and gentlemen. Welcome to the press conference after the meeting of the Monetary Policy Council. Professor Adam Glapiński, the Governor of the National Bank of Poland, the Chairman of the MPC, and members of the MPC, Professor Jerzy Żyżyński and Kamil Zubelewicz, PhD. Dear Governor, over to you. Good afternoon. Welcome during this wonderful spring day, beautiful day. Thank you for sharing this afternoon with us. Information from the meeting of the Monetary Policy Council held on the 2nd and 3rd April 2019. The Council decided to keep the NBP interest rates unchanged, reference rate at 1.5%, Lombard rate 2.5%, deposit rate 0.5%, rediscount rate 1.75%. Incoming data confirm a weakening in some of the largest economies amid persistent uncertainty about the outlook for global activity over the coming quarters. Information on the euro area indicates continued low economic growth in this region at the beginning of the year. In the United States, economic conditions remain good, although GDP growth probably slowed down in the first quarter of 2019. In China, activity growth continues to gradually decline. Despite a rise in global oil prices at the beginning of 2019, their current level is still lower than in the third quarter 2018. This is translating into moderate inflation in many countries, including Poland. Alongside that, core inflation in the environment of the Polish economy, including the euro area, remains low. The European Central Bank has extended the period of keeping interest rates at the current level, including the deposit rate below zero. Moreover, it has announced launching additional operations providing liquidity to the banking sector. The U.S. Federal Reserve has kept interest rates unchanged. At the same time, the Fed has announced it will stop reducing the size of its balance sheet in the coming quarters. In Poland, economic conditions remain good, although incoming data indicate that the GDP growth in 2019 Q1 was softer than in the fourth quarter of 2018. Activity growth is driven by rising consumption, albeit at a slightly lower rate than in previous quarters, fueled by increasing employment and wages, as well as very high consumer sentiment. This is accompanied by a rise in investment. Notwithstanding relative high economic growth and wages rising faster than in previous years, annual consumer price growth remains at a low level. Inflation net of food and energy prices also continues to be low, despite some increase in recent months. In the Council's assessment, the outlook for economic conditions in Poland remains favorable. However, in the quarters to come, there will probably be a gradual slowdown in GDP growth. At the same time, inflation will remain at a moderate level, and in the monetary policy transmission horizon will stay close to the target. The Council judges that the current level of interest rates is conducive to keeping the Polish economy on a sustainable growth path and maintaining macroeconomic stability. Thank you, Governor. Ladies and gentlemen, over to you. Dorota Bartyzel, Bloomberg News. Governor, let me say that this is also a question to Mr. Żyżyński and Mr. Zubelewicz. These details that we learned as regards the fiscal proposal, 1-2% GDP, what is its influence on the path of price changes? Maybe these prospects as regards unchanged interest rates will be shortened. We have analysis and reports prepared by the Department of Economic Analysis. We have discussed these issues in detail. There are differences in opinions. Still, it seems that this package of fiscal initiatives is a stimulus for development, for growth, for maintaining growth, and the aim is also social. It will maintain GDP growth, will increase inflation very slightly, so it is going to have a positive impact on economy in general. Analysis by our analysts show that budgetary deficit is going to grow, but only slightly, unlike it is covered in the media or by private banks. 3%, let's say, if other conditions are ceteris paribus, maybe 2%, not more. So no influence on interest rate policy is going to be expected. If there is no impact on interest rate policy, in your opinion, how long the interest rates are going to remain unchanged? You are asking me the same question all the time. I'm saying that as regards econometric grounds or scientific grounds, we have some forecasts. The further we go forward compared to the present-day situation, the more difficult it is to predict. And this is the same for all of us. You know what is going to happen tomorrow, next week, but in 5 years' time, whatever happens in your life, including personal life, you cannot predict in such a horizon. So as regards 2019, we are going to see economic growth faster compared to March projection. We perceive that it's going to be 4.5. So this is going to be a more favorable growth compared to the previous projection, and maybe slightly higher inflation, but close to the lowest bound of the target interval. And we perceive that next year the growth might be slower, 3.5, 3.7. This is what we can forecast compared to the development in the German economy. That's it. No rapid changes are going to happen. As regards 2022 and further on, it is difficult to predict what is going to happen. As regards the statutory maintaining of energy prices, this is the mid-term of our term in office, and of course the MPC within this term of office will not have to raise or decrease interest rates. It might happen this way, but it is difficult to predict in the long-term horizon. But this year, next year, no changes are predicted.
Am I right in understanding? I'm sorry, I'm going to give the floor over to the next person, but would you condition the decision, the MPC's condition, that it might not be inclined to hike? It is rather taking into account what's going on to the energy prices rather than the fiscal impulse? As regards the fiscal impacts, please don't exaggerate. The pro-inflationary impulse is very weak. The pro-growth impulse is very perceptible, because each point one after the comma is after the point, decimal point is important. So it only decelerates the growth rate. So this is the right moment. It supports growth, and besides, it is not mostly to promote growth. This was done at the right moment, at the appropriate and fully safe moment, safe level, from the point of view of maintaining a macroeconomic balance. I don't see any threats. All I see is the upsides. Perhaps in some individual narrow markets, something might appear, especially as regards the third sector in services. So people who will get another several hundred zlotys, they can en masse their purchases in a given market, and something might happen, maybe a little bit more crowd in Zakopane or Sopot resorts, greater demand for children's goods. But from the point of view of what's over the bank's interest, the prices, CPI, the impact can be insignificant. I mean, my colleagues can have a different opinion, can have different opinions, but we've discussed it. But I don't think I've said anything being beyond the Council's standpoint. It is my whenever I present my own opinions, I state so, and otherwise I present the MPC's opinion. But I'm not authorized to talk about what's beyond 3 years, not even beyond 1 year. It's only my women's intuition, so to say. So if I may, I've been asked to by Dorota to address her question. Let me remind you that in Poland we have very low salaries. In line with the international statistics, the share of manpower costs for last year, it was 38%. In the EU, it's over 40%. In the US, over 50%. In Switzerland, above 60%. So we have a lot of room to compensate for that low remuneration level. So the fiscal expansion is not so large. In fact, it does not threat the economic balance and stability, as the governor said, as some people might think. Let me remind you also that whatever people spend will come back to the state budget, because we're talking about both VAT and there's some revenues derived from this. Someone earns some money. People spend money, someone else earns on this, and these earnings represent also some taxes, both CIT, PIT, and VAT. So there is this multiple effect of this slight fiscal expansion. So the MPC is not so much afraid of the fiscal expansion. However, you have to keep in mind that there's no way of knowing what the future holds, because it depends on the economic environment. As the governor said, the further beyond, the more uncertainty. It's like a fan, as the governor said. It implies some increasing risk over time. So we have no reasons to be afraid of this, and the MPC decided that the rates have to stay at the current level. Besides, demand expansion should always be supported by supporting the economic growth and supporting the supply. If this is continued, the MPC should support the monetary policy, should support economic growth. At today's meeting, some people had a different opinion, and I might just refer those views to you, not necessarily only mine, but also those of other MPC members. Namely, there have been some concerns raised that the fiscal impulse might contribute to a growth of the average price level. One might even estimate this at 0.1% per annum. What would it mean? It would mean that the inflation in Poland, annual inflation, might reach 2.5%, so that would be half through the target band. Where would that be derived from? First of all, the forecast price increase for services for 2020 at the level of 3%. Well, the energy prices, which has been stopped for this year, or administrated prices as forecast. These are, of course, our estimates. We can also observe an increase in the construction sector. And which factors will be conducive to the growth in supply, as Professor Zrzyński mentioned? It's first of all a little bit about the fiscal package. It's about the labor taxes, and in Poland it is quite correlated. I mean, the number of people earning the least within workplaces. This is the first element. Secondly, the bad economic situation in Ukraine will be conducive to increase the immigration to our country. And thirdly, there is also the issue of oil prices in the USD. One should estimate that it should be fairly stable. Unfortunately, it's going up in the PLN, but it's still a lower level than the previously quoted one. So the fiscal impulse should not, per se, cause the inflation shooting beyond the deviation band. Thank you very much. Next question, please. Rafał Tuszyński, Polish Press Agency. I'd like to ask about your opinions on the real economy data that have flown in since the beginning of the year, both from the real area and the labor market. They were higher than expected, better than expected. Yes. So, which might translate into an increasing, a growing increase in the core inflation, because some economists say that the core inflation will be reaching the highest level since the past 6 years. So the question is whether these data that have been contributed are part of the March projection, and if so, how could they impact your forecasts going forward throughout this year? Let me take it without quoting. You're not quoting the names of the economists. There are some economists who, for the past 5 years, have been forecasting tremendous clashes in the labor market. Now that I've been on the board, I've been governor, I haven't seen any. I mean, it is a potential problem. I mean, we have the potential problem that we have a very low fertility rate, and even from Ukraine, the influx of employees cannot go on forever. But let me repeat this. Well, if you played back our press conference from 2 years back, that would also raise your concerns. I should say too many concerns. Poland is an attractive place to work for employees from some countries, and if need be, they will be flowing in. Mind you that also labor productivity is increasing, so we're not facing such problems at the moment. I mean, one can raise some concerns, one can postulate some activities in this respect. Of course, we're analyzing the opening of the German labor market, or partial opening, which is competitive to us as regards the Ukrainians. But there are no alarming signals in this respect. If any problems occur, we will be sharing it with you. I don't expect any problems over the next years of this sort. New potential sources of immigration are opening, which is under control, and it does not disturb our social lives. Mind you, everything is going on in a very harmonic way, a very good thing. That's very good. We have accepted highly qualified, highly skilled people from Ukraine, young people who are studying Poland. Many of them mean to stay in Poland for a long time or forever. An increasing proportion of them are paying the social fund contribution, supporting our social system. So everything is doing great. You also asked another question beyond the labor market. Yes, whether those real economy data don't surprise you positively. I mean, they do, yes, because the German economy has declined substantially, and the increase of the German economy has stopped, especially of the industry. It's going on for another quarter, but our German colleagues are saying that this is a temporary and transient phenomenon. We wish to believe it, and that this economy might slightly rebound in the next semester. Of course, the German economy is most important. Well, the Eurozone, especially the German economy, that's what we expect. But what came as a positive surprise was that Poland's economy did not respond all that much to such a drastic decline in the economic cycle in Germany, because per the analyses from the previous years, it always stemmed that our connection with the economic cycle in Germany it was stronger. I mean, it is still strong enough, but the economy responded less drastically than before. Polish exporters are strong, robust, and this impact is not so strong. I mean, we're going down from the growth level of 5% to 4.5, which is not so much against the natural growth rate. It's still great. However, everything is happening in the macro balance, under macro balance conditions. Neither in the labor market nor in any other market do we have any imbalances.
Now, as regards the base inflation, we have seen some growth. It was not dynamic. We are speaking about services. As regards services, we can say that there is some increase, which is a bit higher, but it might be temporary, so we are going to wait and see. But taking into account this better situation and positive output gap, similarly to last year, the situation is good, is perfect. The growth is developing a little bit slower, but this slowing down is very little. So the situation is extremely good, it's perfect, and it has not always been this way, and it is not going to be that way all the time. But this year, in accordance with the forecasts, the situation is going to be perfect. And this fiscal policy is going to help our economy, and it is going to have a positive impact on the improvement of living conditions. And the outlook is very good. This growth is going to be positive. 0.5% less than 5%, but still growth is going to be positive and inflation is going to be very, very low within the band, and no intervention is needed. So all the economic situation is very stable. Of course, there are some difficulties as regards the housing market, that demand is ahead of supply, or supply is a little bit ahead of demand. But as regards mortgage loans, they are developing very well because we can see consumer optimism, which is high. We have been mentioning about the development, and there were some rumors about the salaries in the National Bank of Poland, and we have been explaining that last year by 7% we could witness growth in salaries in the banking sector, which is a benchmark for the NBP, where we can see 4% increase as regards the salaries. We are not speaking about all occupational categories because wages are different as regards different occupations, but living conditions are growing forever. Nothing goes on forever. And for 20 years in communist China, they witnessed growth, but then there was a decline, so situation might change. But as regards the residential housing market, we can see some positive developments too. Dear gentlemen, don't you witness some problems or some surprises as regards inflation when we speak about core inflation, and maybe there are no reasons for changing interest rates? Let me draw your attention to the fact that inflationary expectations have stabilized, have decreased actually as regards entrepreneurs. So we do not see any problems that there are expectations for changes. And given positive economic growth, which is higher compared to well-developed EU markets, we can say that the prospects, the outlook is very positive. We are going to reach the Western European level of economic growth, economic development. It will take years, of course, and the National Bank of Poland supports the value of the currency to improve economic growth. As regards the labor market, we have observed the decrease in the number of employees of the employment age, and we can see some of the effects, 8% growth in wages year on year. So we can see some changes in the labor market here, and the migratory influx is going to stabilize the situation in the long run. If the economic situation were perfect, we wouldn't have to introduce the fiscal policy, the fiscal package. In 2019, some of the prospects were not that positive, so maybe in order to introduce economic stimulus, we could delay the implementation of the fiscal policy, but we are not here to judge these steps. From our point of view, it is important whether these changes are going to happen at once or will be developing along a longer timeline. So if these are immediate changes, the inflation could increase, but then it would slow down. But the fiscal package will not have an effect on our decisions, I believe. I believe that there are changes related to energy prices. First of all, there were expectations as regards hikes in energy prices. Now expectations have stabilized because for a year or maybe 2 years, energy prices will remain unchanged. Since we witness moderate economic growth, inflation is going to be kept in check. So here we agree with the governor's opinion. I'd like to ask about next year and pro-inflationary pressures. Next year, there will be an increase in energy prices, apart from core inflation and wage pressure. So there will be a risk of going outside the inflation band. Energy prices and core inflation, these are major factors. So how about inflationary target next year? As regards core inflation, we are going to see the level of core inflation, what it's going to be. As regards other pressures, it is difficult to assess some of the social expectations and so on, but we don't see any pressures which would strongly influence inflation. As regards the labor market, the inflationary pressure is not there. Maybe this is a journalistic approach here to these pressures. In 10 months or 9 months, we're going to have elections. But I don't expect any strong effects. We do not witness any processes of the pressure And you are asking questions that indicate inflationary pressure. We do not see it. Economic conditions in the world are positive, but economic growth is slowing down. In some of the Western European countries, as regards the GDP growth, it is below the growth in 2008 to a large extent. And capital costs zero in some of the countries. Economic stagnation in Germany. We are not an island. We are not separated from all this environment and surrounding. And you can buy goods from different countries in a shop. There is competition. Of course, energy prices are not part of the market. Sometimes we speak about CO2 emissions, and because we are coal producers, we have to take this into account. If energy prices were generated only by power plants, we wouldn't have been witnessing such price hikes. And of course, coal is a very important source of energy. And if it were not for CO2 emissions and pressure as regards clean energy, we would have to face this burden. Whether it is justified or not, it is not up to us to decide. This is something we have to take into account, these additional costs, and we have to face them. I am an optimist, and I've mentioned it several times that I am an optimist as regards radical revolution in terms of energy. We are going to use solar energy and other renewable sources of energy, and the situation will change. This year, the government has made this important decision to keep energy prices unchanged for the population. But we are not going to decide about prospective decisions of the government next year or 2 years from now, whether the prices are going to be frozen or not. If there is rain, we take it into account. If it's not raining, we are taking it into account too. We cannot influence rain. So I'm not expecting hikes in inflation. I don't see any factors that have inflationary pressure, not labor market, not fiscal policies. Nothing has actually influenced inflation, and the situation in the surrounding in Basel for a year we have been mentioning it that no inflation growth is going to be expected, and there is quantitative easing and so on. And the Fed used to raise interest rates, but they've stopped doing it. The European Central Bank didn't want to change policy, but also diverted from changing interest rates. So we are going to think about introducing money to the economy and QE and reinvestment and other types of quantitative easing, because economy needs oxygen. European and world economy is not growing very rapidly. We are seeing some bottlenecks. We can see the decline in the economic growth, and we have to stimulate it. Why don't other economies decrease interest rates? Because if they're close to zero or below zero, you cannot decrease them.
And then you can only resort to QE, and they are doing this. But we have this perfect situation, much better than them. And I'm not talking about this just to sport of this. Well, it just so happened because we didn't lower the rates excessively during the previous term, and they have been at the same level since the latest 49 MPC meetings. I know it's kind of boring, but it's conducive to the stability of the Polish economy. We're predictable. Our securities have a perfect valuation. The PLN rate is fully stable, although it's a completely free currencies, one of the exceptions in important economies. Well, so why should you be surprised? I'm kind of surprised you're not asking why whether the economy will not be slowing down. I might be thinking about this. Well, the EU funding will be terminated in 2021, but the growth of inflation is not something that should be depriving us of sleep. But mind you that there is the National Bank of Poland, there is the MPC, there's a whole array of specialist professionals in Poland and probably also in Europe, because we're best at foreseeing the phenomenon. But this is also up to the next term, and the next MPC, and the next governor. So in 3 years' time, a little bit more. Well, I'd like to ask you about the ECB policy, because is it the case that since ECB has gotten too far, well, there's always some inertia. If you've gotten involved in something, it's hard to stop. Well, now that they've stopped, is it a confirmation of the correctness of the NBP policy? Yes, definitely. Of the National Bank of Poland. I mean, mind you, they have stopped, but they are still resorting to QE because they are reinvesting the money from what they did before. They haven't been taken away from the economy, but the securities are maturing, and then this money is being reinvested. They keep pumping money, and we're not. I mean, you don't push any empty money, and it's all being natural. I don't think there's any empty money in this pumping. It's basically buying bonds, redeeming bonds, corporate bonds, by the way. Exactly. So I'd like to say that, observe that those attempts at stopping this expansive policy have come to a bad end. I mean, they had to repump it. So if the energy prices should go up, it might push the inflation upwards on the cost side. Yes, on the cost side, but there would also be no premises for us to change the interest rates. But well, should we restrict the crediting conditions by the central bank because of the energy prices, because of the costs imposed on us from the outside? I don't think so. So should we actually worry? Everything indicates that this situation will be continued in the next year, or as it's been said, until the end of this MPC's term. Other than the ECB, we also have Hungary and Romania on the other side. So Romania has decided, just like Hungary, to resort to some other conditions that allow you to control liquidity in the market. Are you taking into account? I mean, we have analyses on Hungary and Romania. We don't want to criticize our friends excessively, but in Romania, well, the remunerations have not been kept in check. They increased by several dozen. Well, the growth rate was of several percent. So what if the inflation was of 70 or so percent? That's never a good phenomenon. So they had to use some subnormal or excessive solutions to keep it down. In Poland, we would never allow it. We are an economy which is maturely controlled. We would never allow such a remuneration increase of several dozen percent, nor the inflation by several dozen percent. We would have stepped in way before both the National Bank and the government. Well, that's what happened in Romania. I mean, everybody has their own problems. This economy is poorer than ourselves. So ECB did it too early and Romania too late. Exactly. So they have a different situation. Hungary are a small economy. Hungary is a small economy. The Hungarian National Bank, Central Bank, is involved in a special policy, quite converse to all other central banks. They're doing good, but it's a different world. We are observing everything that they're doing. They've done everything to stimulate activity through bonds, all sorts of activities. But this is not transferable to our turf, because it functions in a different way. The Hungarian bank is not a prestigious bank that would be an important part of the European banking system like us. We're doing everything in a more conservative, evolutionary and credible way, which is perceptible by the PLN rate. Mind you, what happened to the HUF, the forint, and what's happened to the zloty. We're a stable economy. Mr. Governor, two more questions. We're coming to a close. Yes, I know that Mr. Andres is keeping us in check, speaking about control. I'd like to ask you about this reliability of the National Bank of Poland and the intellectual and scientific background. I mean, on the one hand, no one would like to question that, as well as the merits of the MPC. On the other hand, we cannot talk about this, Mr. Governor, that only publicists have been Cassandras. I mean, economic publicists or columnists, because everybody had an opportunity of reading the letter by outstanding Polish economists who have shared with the public opinion and the government with their care about whether the fiscal package is something that we can afford. Outstanding economies, part of them are very strongly politically involved. A large group of those outstanding economies that you were kind enough to mention are running in the next elections and the next elections as well. So let's just wait for the elections. Professor Balcerowicz is a politician and he mostly talks about political issues, and Professor Belka is. It's normal of politicians. I'm not, and I haven't been for several decades, and nor are my colleagues, and we have the luxury of not having to talk about political issues. So let's wait for the elections and then until the elections, except that I cannot fully understand it. I mean, I've been dealing with the monetary policy in a lofty way. I've been dealing with this as well, and such a fiscal package so important with regard to its size allows us to say today in 2019, still at the beginning of the year, that interest rates might remain unchanged for such a long time, as you're saying, until 2021. The main goal of the National Bank of Poland is the price stability, which is the strength of the zloty, and that's what we are taking care of. If we see any signals that anything might be changing, we're not working on an overnight basis. We're looking into the forecast for the next quarters, then we will take some action. And now, we can tell you honestly that there's nothing like this. This package is only at the starting point. Last year, Poland had the lowest budgetary deficit in its history of 0.4. So you will appreciate that if the government wanted to break any records, it would have been zero or perhaps positive. We've never had this in history, and this only testifies to the condition of Poland's economy and public finance. It would take hours to discuss the factors, both ours and our merits and external and historical factors, but it's 0.4. So in this situation, letting go of the expenditure a little bit to 2%, that's very low. Mind you that a number of European countries, rich and also well-managed countries, have surpassed 3%. have gone way beyond 3%. We haven't. Now that we've promised to stick to 3%, we're not going to. Of course, it would be nice to have a positive result, as in Germany. It would yield some additional money. I mean, we also have some reserves. We don't necessarily need them. At our stage of development, in those countries did not have balanced budgets. They had a very large deficit and very large indebtedness. They had to fund their growth. And we are such a country. Since we've joined the EU and all our obligations, we're keeping those 3% to be a credible country. But going beyond to 0.4 to 2, I mean, it's a perfect situation that the previous ministers of finance of the previous government's terms and so on could only have dreamt about.
Right, so Professor used to run this department and for dozens of years has been dealing with budgetary issues. As Professor Osiatyński, who deals with fiscal policy, has mentioned, and he is our distinguished colleague, and it is related to child benefits program 500+. It was not expansionary fiscal policy because it did not lead to the increase of the budget deficit. As has been mentioned by Governor, we used to have a very low budget deficit, the lowest in history, so it is not necessary to tighten monetary policy, because some say that tightening of monetary policy is a response to such changes in fiscal policy. If there is no demand for loans, for credit, and we see the increase in wages and deposits are growing, and they are growing faster than loans, we do not need to take such measures by the central bank to change the value of money, because of course these are not only interest rates. There is the commercial sector, and those who take loans would like to have lower rates, those who give credit would like to have higher rates, but we do not see any reasons to tighten monetary policy. Let me add something. So far, fiscal policy, I must say, has been moderately conservative. It is now going to be mild, and we have mild monetary policies, so there is some inflationary impulse ahead of us. But on the other hand, the situation is that we have a very good starting point, inflation close to the lower bound of the inflationary band target, and there are such factors as oil prices. Otherwise, the situation would have looked different, and consumer credit is growing and consumer appetites, but the deficit is going to increase, but deficit is not a pro-developmental factor. This program is not to introduce such changes, and therefore the government has made such decisions as regards changes in fiscal policy. The last question, please. A question to Governor. For a year, this year we're thinking about the decline in economic growth, slowing down of economic growth. So as regards inflationary pressure, this is one thing, and maybe finally, ultimately, increase in interest rates. Maybe we shall ask a question about a possible decrease of interest rates. rights. So there are such brokers, and you can bet on some sports team. So this is what we can advise, but I will say that interest rates are going to remain unchanged, but maybe the situation will change in Germany. There will be a war or hikes in oil prices. We cannot predict everything. No econometric model is going to take into account all the factors. So we have very good stuff. We have very good tools. We have top quality data, and we devote a lot of money and resources to that, not money of taxpayers, I must say, because the National Bank of Poland does not use taxpayers' money. This is a separate institution, and we do spend a lot of money and resources on economic analysis, on trainings, on conferences, and so on, and our IT tools and information sources are top quality. So we are not lagging behind the best standards. Even Americans make mistakes. Specialists from the Federal Reserve can also make mistakes, and they have made them because the economy is developing and there are different human factors and so on and so forth. So maybe some artificial intelligence is going to cover all the unexpected factors. Economics is arts. It's a very elaborate science, and we have to take it into account.
Well, intuition goes a long way. My colleague economy, Zubilevich, well, I believe that economics is a science. Well, Mr. Zubilevich is an optimist, and he belongs to, well, I'm a pessimist. So to every signals on inflationary threats. So if there are any, then Mr. Zubilevich, as well as other colleagues who are referred to as the hawks, will be very much cautious to this, and that's why the MPC is so large. Well, when I was in favor of a different constitution. Well, the constitution is what it is, so I respect it. But the MPC is so large, and owing to this, we have various positions represented. Some people are from Warsaw, some people are from Poznan, some people are from the university, from the Warsaw School of Economics. Well, everybody boasts of their own, yes, and indeed this is one of the best analytic teams equipped in perfect models, allowing you to also evaluate everything, of course, with some errors. There are no better models in the world. So the complex model is the world of finance. Well, in economics, luckily, not everything can be foreseen. So definitely, we're not predicting any. We will not miss any signals talking about inflation, and likewise stagnation. This is our one of our basic target. We have our most important goal, which is also taking a lot of our attention. That's the stability of the banking system, the payment system, the oversight overall, the payment tracts, the safety and security of payments. We even supervise exchange offices. Well, there's a lot of things, but supervising the stability of prices, combating inflation or deflation for that matter, luckily we don't have that problem, but this is our constitutional objective. That's how we are looking, how we are accountable for this. We now have an audit by the Supreme Audit Chamber, but that's what is of interest. Thank you very much. Well, one more question, if I may, to take the advantage. Well, from the point of view of funding the fiscal package, it would be very important to pay the possible profit for, well, you know perfectly that at this stage, well, by the end of April. Yes, by the end of April. We'll be sending it. So the auditors, well, all analysts predicted maybe from 5 to 8 billion zlotys. Well, that would be an unpardonable mistake. Well, I won't tell you anything else. I mean, I will, but it's going to be in a month's time. So thank you very much, and I'll see you in a month's time. Thank you very much. Goodbye.